Good morning, good morning, good morning. How are you doing, guys? Good morning, good morning, good morning. How are you doing, guys? I mean, like it's 1 p.m. for me now, so I guess it's in New York. It's 1 p.m. for me now, so I guess it's in New York. It's 8 a.m. And so I'm happy to have you here today. So we have 4 people on the live so far, and so today I'm planning to do a daily analysis and then ship reading on ES again. And if you have any asset you want me to do a daily analysis on it, I'll be more than happy to do a daily analysis on NQ, crude oil, anything you want, you know. So we don't really stick on ES because I do love ES. That's the reason why. Okay. Without losing any time, let's go and switch the chart and start our daily analysis right now. All right. Anyone yesterday took a nice trade yesterday? Hi, Brianna. How you doing? Hi, Brianna. Brianna. Hi, Brianna. How you doing? Anyone took a nice trade yesterday? Anyone took a nice trade yesterday? I took a few bad ones. Bad one. All right. Yeah, I mean, like with the model, you just need to stick to the rules, and then you'll see things will be much better. Yeah, you just stick to the rules, and then all right, here we are. I hope you can all see my screen very well. Can you see my screen, guys? Can you see? I'm sharing my screen, my chart. Can you see it? Yes, on the Nikkei, yeah, for sure. Okay, we can program that maybe next week. Maybe next week I'll do the analysis on Nikkei. Anyone else? Anyone have any requests? I mean, I love to trade ES, but at the same time, I'd be more than happy to do an analysis on any other pair or any asset you want me to do. You know. All right. As we can see, okay, now what we're going to do, so let's delete H4, every single H4, HBC on the daily. HBC on the daily was close inside, seek and destroy. And let's delete HBC on M1, HBC bearish, let's delete everything. All right, this is a nice example. And so the market doesn't took this. And what anything else? HBC. Okay, good. Okay, as we can see, as we can see, okay, as you can see here, guys. So yesterday, what do we close? Anyone can see what's yesterday candle? How did the yesterday candle close? Anyone? How did the yesterday candle close? Brad, Brianna. Anyone? Anyone? Bullish. It's not bullish, George. Bearish affinity minus. Bearish affinity minus. Why bearish affinity minus? Brad, do you think it's affinity minus, Brad? Let's check out. Bearish affinity minus. Let's measure it. From here to here, this is the bearish pressure, 0.56%. From here to here, the bullish pressure, 0.39. It's bearish affinity plus. So when you measure, for example, when you measure the bullish pressure, it's from here to here. No, the bearish pressure is from here to here. From the high until the close, which is 0.56%. You take the rules and then you measure the bearish pressure from here, the bullish pressure, I mean. The bullish pressure is from the low to the close. It's 0.41%. So since no, it's okay. So we have a certain way to do it. Okay, it's better that we use the rules instead and then check where do we have the bearish pressure. So the bearish pressure, you'll be measuring it from the high to the close, and then the bullish pressure will be measuring it from the low to the close. So this bullish pressure, and from here to here is bearish pressure, and then you check the percentage with the rules. For example, we are going to measure the bearish pressure from here to the close. It's 0.56%. All right. And then now we're going to measure the bullish pressure from here to here to the close. It's 0.40%. So which means, and then since we took the high of the previous day, and then we close inside, and then this is a bearish affinity plus, which means we're expecting today to take this low, which already happened here. No worry about it, it's okay. So we have a different way to do it. It's just like by measuring the candle pressure, or instead of expecting the candle to close bullish or bearish, you know what I mean? So it's better we just measure it. So in this way, it's easier in a certain way, you know what I mean? So yeah, and then okay, so we have a bearish affinity plus. So now we're going to mark it out. We have a bearish affinity plus. Let me move the tools here. Okay, all right. So I'm going to move let's mark out. So and then first, second, I will be activating the magnet. So so price already took this bias. Remember what I said yesterday, guys. So when price come to this level, under every single candle, you will have sellers on buyers on the low, and on the high you'll have sellers. So whenever the price arrives at this level here, sellers will come in to push price down, and whenever price come down here, buyers will come in to push price up. So on the low of every single candlestick, you'll find buyers. On the high of every single candlestick, you will find sellers. Great. Okay, so let's mark out our candle of today. Today is bearish affinity plus, bearish affinity plus low. And then And then next we'll mark the high, bearish affinity plus high. And then you just come in and then mark it as the daily, capital letter, and then here, daily, capital letter. Good. So now we expecting price to do what? We're expecting price to come down here and take this low, which already happened. So we had a bearish affinity plus. Price already took the low, which means if price took the low and reverse and keep pushing up, so highly likely price might come all the way up here inside of this unfair pricing gap, maybe push down, maybe tomorrow or on Thursday, on Friday, push down and take the weekly target. So it seems like price is retracing first. So let's check the weekly. What are we seeing on the weekly? Yeah. So what we're seeing on the weekly, we still see that price is retracing inside of this candle. So on the weekly candle, what we don't want to see to remain bearish, that we don't want to see price violating the weekly high. Okay. Okay. We don't want to see that. But what will be very, very happy for price to not to see on the daily as well. Price, we don't want price to come here and violate this MMM internal block on the daily. Yeah, and because this MMM internal block, not only we have it on the daily, we have it on the 4-hour, and then we might expect price to come all the way here, fill out this opening gap, or even here, or come here, fill out this unfair pricing gap on the daily. Okay. This is unfair pricing gap on the daily here from here. This is a 4-hour unfair pricing gap on the 4-hour. Okay, with the on-fill portion here, and then we have like the daily here. Price came inside of the daily yesterday, but didn't close inside of it. Okay, so price leave this unfair pricing gap on the daily as well. This on-fill portion on the daily as well. Sorry. So from here to here, we have an on-fill portion on the daily. Okay, let's mark it out. This is the daily. So price yesterday came here on the daily, and then inside of the unfair pricing gap here, and tap inside of it, but didn't stay inside, and then went all the way down. Let me put it a bit so we can see. Okay, so price came inside of this unfair pricing gap yesterday on the daily, and then it leave this entire portion on fill. So which means if price didn't follow up here today, which means price highly likely come back to this level here today. Come back to this level, maybe completely filled out this unfair pricing gap on the 4-hour, and then reverse down, and then bump into the weekly swing success, because we have a lot of order here, might just bump into it, or even bump into the midline of the unfair pricing gap and then push down. So I don't really think that price might fill this daily unfair pricing gap, but it might happen. But most highly likely, I'm expecting for price to come to this level again, and then maybe fill this unfair pricing gap on the 4-hour and then push down. This is the best case scenario. If not, price might decide to go all the way up here to even fill the opening gap here on the daily and the 4-hour as well. You know what I mean? So this is the scenario we might be looking for today. That price came inside here. So today we had, since price already took this low, okay, job is done. Since job is done, price didn't push down to take this liquidity, which means price want to create a lot of liquidity here and then deliver inside of this hole, because price do not like these holes. Okay, highly likely price came inside of here. So we are bearish. Bearish affinity, price already delivered to the low. Okay, so now we are looking, will price give us a market stick to change? So if price were to make a market stick to change, it will be on top of this candle, which is quite far. Okay, which is quite far. So we are expecting now, since this candle closed bullish body close, so we're expecting price to do what? we're expecting price to come here on the 4-hour. Let me check if there's nothing we missed on the daily. There's nothing we missed. There's no unfair value gap. We already marked everything we needed to mark yesterday. Nothing is missing. Oh, just let me check the volume candle. What is our HVC? This is our HVC bearish. We already marked it. HVC bearish here. This is still our HVC bearish. Okay. Since this is our HVC bearish, so we don't expect price to have a bullish body close on top of this candle. Okay. So this will be our HVC1 now. Okay, this will be our HVC1. So we don't want to see price have a body close on top of this candle. This is our HVC1 bearish on the daily. Okay, so we don't expect price to come all the way up here and then took and close bullish body close. Okay, so we don't expect that. So next, so and then we're just going to do a quick check since we do all this analysis yesterday. So we have a lot of markup, and then this is our bullish HVC. We already mark it out. So and then let's check where. So price is in discount, which means price highly likely push up a little bit here into premium to give us an opportunity to enter based on the daily if price were to push down. Okay, so you see everything is in accord. Since we're expecting price to push up here, fill out this unfair pricing gap, and then you see price is already in discount. So it's like we're having a kind of confluence with the premium and discount oscillator. All right, good. So now we're going to switch to the 4-hour. What do we see in the 4-hour? In the 4-hour, remember what I said yesterday, that see price came to this level here. It took the push up. Okay, so but price couldn't close bullish body close. This couldn't close bullish body close. This was a bearish close closing side with bearish affinity. Let's measure it. Closing side with bearish affinity from here to here. It's 20%. This is the bearish picture. Okay, so this is very clearly, this is the only bullish picture here. So this is the closing side with bearish affinity. And what do we have next? We have a bearish body close. And then bearish body close, what we expect price to do to take this low. What did price do? Price took the low of this. So price delivered to this level. And then since price delivered to this level again, and then since yesterday price reacted very strongly to this 4-hour candle, and then price came back to it, reacted a little bit, and then this candle did the job and then push up again. Which means if price wanted to push lower, price will have pushed lower to this level, which means the buyers at this level here, same level as yesterday, they bought at this level yesterday. So when price came back down to this level, they will buy again. And then now they are pushing price up. Okay, so what here they are tricking you to go, long. All this candle, you see all this candle, they are tricking you to go long here, and then if you go long, you lose. And now they start tricking you to go short. Now, when you see this bearish body close, they are tricking you to go short, and then a lot of people will try to push down in this candle, right? And then, but this candle, since yesterday, the market have memory. A lot of buyers, not memory, I mean like the buyers already here in this area here, they bought again. Look at this candle, huge candle. This is the bullish buyers BUVC. So we have a huge candle here. So here, from here to here, there's a lot of buyers. A lot of buyers. From this to here, a lot of buyers. So they will buy and buy and buy and buy again and buy and buy. So that's why you see this reaction here. So price is pushing up, okay, and then you have a PO4, and then which produce a MMM block. We don't know if it's internal. We don't know if it's external because we don't have any external yet from this swing. There's no MMM external block. Okay, for this PO4 bullish on the 4-hour to be MMM external block, it needs to have a bullish body close on top of this candle. Okay, so what we can expect is that on the daily we don't have any bullish body close on top of this candle. price might come here, okay, but no bullish body close on the daily. Okay, so next, so we need to wait for this candle to close to make sure that this candle is to make sure that we have a unfair pricing gap up here. Okay, so remember, whenever price can come back to this level again, it either need to crush it, that means like pass it with strength, with power. All right, but if price doesn't do that, which means we have some weakness. Okay, which means we have some weakness, and then since we have weakness, price will correct. Okay, price since we have a weakness if price crush this level past these buyers here, which means the buyers are the buyers are weak, which means price highly likely keep pushing down. Okay, so it needs to be with strength, with power, with willingness. Okay, and then now we have on the 4 hour, we have a bullish body close. So what we expect next? Okay, bullish body close 4 hour, H4 high, drawn liquidity. So this is our target on H4. Okay, and then H4 low, we don't want to see the candle violate this level here, but it might, but we don't want to. If we were to take a long, we don't want to see price violate this level. So this H4 low, and then this is where you find a lot of order here. See, this at the same level, okay? Same level of the market to change on the weekly, this level here, and then this is the same level that we have the settlement line. This blue line is the settlement line, which means like there's a lot of orders at this level. And do you see how price quash it? Just pass it like with strength, with power. And then here now, we have a very nice confluence because we have like an equal high here, which means we have a lot of liquidity. So we know price highly likely come to this level here. Okay, highly likely come to deliver to this level. Okay, see, price is generating liquidity. Probably at 9:30, we might see price come all the way up here. Okay, this is what we might expect at 9:30 open. All right, and then what's next? What can we see next? And then we don't have any unfair pricing out yet, but now we're going to check the volume. Which one is our highest bearish candle? Our highest bearish candle is this candle here. Okay, what we don't want to see for price to do, to close above this bearish body close, which means if price close here, bearish body close. Okay, this is our HVC. This is our HVC bearish. Okay, we don't want price can come on top, but we don't want to see price close above it, right? We don't want to see anybody close above it. Okay, H4. Okay, and then where is our HVC bullish here? This is our HVC bullish, and price couldn't close. So this is still our HVC bullish, and our new HVC bullish, where it is, it's down there, bearish. Okay, this is our new HVC bullish. Let's check it out. Yeah, this candle here is our newest HVC bullish. Okay, our newest HVC bullish. So let's mark it out. So the H4 low, since price cannot close below it, is our HVC bullish on H4. Yeah, good. And then price cannot violate this low. Remember that. Okay, which means price we cannot have a body close above here. We cannot have a body close. All right, we cannot have a body close. So what's next? One sec, guys. Okay, what's next? We have our HVC, we have our equal highs, and then we have our target, and then this is highly likely our MMM block, but it's not formed yet. It's formed, but we don't know which one. If it's just a simple and plain MMM block, we can just mark it out. But it's just an MMM block, like simple MMM block long on the 4 hour. Okay, 20, let's mark it H4. It's just a simple MMM block. Okay, so because we don't know if it's external, if it's internal, because we have nothing on the 4 hour at this moment. It's just a plain MMM block, right? And then let's check where we have price. We have price coming from discount, pushing into what? Into premium. Exactly the same reading we did on the daily is the same reading that we can confirm on the 4 hour, which means like price wants to move up. Okay, this is highly likely the scenario we have for today. That price keep moving up inside of what? Inside of the of this unfair pricing gap around here. Okay. So let's go on the 1 hour. In the 1 hour, what do we see? We still have a lot of equal high. Okay, a lot of equal high. Maybe, and then what can we see again? So the 1 hour was what? Brad, can you tell me exactly what do we have here? What kind of candle do we have here? So since we have the bearish pressure from here to here, so this is a bearish with bearish affinity plus. Okay, bullish body. This is a this is a bearish affinity plus. Bearish affinity plus, which means we're expecting this candle to take this low, which it did. It just took the low, went all the way up here, and then pushed down. Oh, no worry, Vlad. It's okay. I think the I think but you get it well. You get it well. Well done, well done. I think the YouTube is a little bit like has some latency, I'll say. Yeah. So yeah. So maybe no worry. All right. So what do we have here? So now we are going to check what next candle will. So how this 1 hour will close. Are we looking to come down here and fill out this unfair pricing gap and then push up? Okay. So what are we looking at? Okay. We have a lot of unfair pricing gap on the one in the 1 hour. Let's mark them out. Okay. A lot of UPG. We have a UPG here. 1 hour UPG, and we have another one here. Another UPG at the same level, 1 hour. Okay, we have two UPG at the same level, which means like we have a lot of buyers here. They will put when price arrives at this level, they will push price like crazy. And then we have the settlement line here, the settlement line, 2 UPG at the same level, settlement line, market switch to change on the weekly, same level. So when price come back, if price come back to this level, it will be with a lot of strength. All right, and then let's mark out this UPG as well. Okay, UPG on H1, and we have another one here. Let's mark it out. Okay, good. And then what do we have here? What are we seeing in the 1 hour? In the 1 hour, what did price do here? We have a MMM external block in what? In the 1 hour. We can just take here and then put it here. So remember yesterday when we did our analysis, okay? Event price went all the way up here. Remember what I say? We need to keep looking for short. Okay, we need to keep looking for short. Okay, and then price didn't violate the M15 here. See, and then price just push up all the way down here again. Okay, you remember the analysis yesterday I made? Anyone remember what I said yesterday? Even this price was pushing up here, bullish body close. You know, I say, don't worry, price will push down because what? Because price, you need to be reading price because price is dynamic. You need to be always reading what the market is telling you. You know what I mean? This is the way it works. It's not static, it's dynamic. Since price is dynamic, it's always in movement, always doing something. So we need to be always very attentive to looking what price is telling you or what price is doing. All right. So since yesterday when price pushed all the way out here, I say don't worry, this market will push down. And then what price did? Push down, came back to this unfair pricing gap and push down again. See? Because this was on the 1 hour. See? We have this on the 1 hour. Market 60, we have a market 60 change, but on the 15 minutes, clear. I'm going to show it to you in the 15 minutes. And then, so now we already mark all our unfair pricing gap, and then we can see we have an MMM external block CDL here on H1. Okay, so we're expecting price to do what? To maybe to retrace and then push up. Exactly. So now price is in premium. Since price is in premium, so we highly likely expecting price to retrace inside somewhere here and then into premium, into discount, and then give us a nice entry. If we were to trade these MMM external block, if we were to trade this MMM external block of the 1 hour, okay, the 1 hour one, let's not mark this H4 because it's not external or anything. In the 1 hour, if we were to trade this MMM external block CDL in the 1 hour, we need to wait for price to retrace inside here, inside of discount, and then give us a PO4. Okay, PO4. Oh, 20 seconds after the comment. Okay, thank you very much. Okay, so now I know. Maybe I need to wait for a couple of seconds. Even I put it like ultra latency, but it's still. Let me just get out of some pages. Maybe it might be space. All right, it should be okay. Okay, so and then even though we see this MMA external block, whenever you have your MMA external block, this is where you need your focus should be around here. So if you were to take a trade based on this MMA external block, you need to wait for price to retrace into discount, okay, and give you an entry here, a PO4, okay, a PO4 bullish, and then this is where you take your trade in the 1 hour. But we can use the 1 hour as a confluence to take trades in lower time frame. So but everything needs to stick together. For example, we know that price highly likely want to come here to this equal high, okay? Highly likely come to this equal high. So this is what we're looking for, okay? Okay, that price come inside of this equal high here. This is our target. This is what we are expecting price to do. All right, and then what's next? We are expecting for price to do what on the 1 hour now. So we're expecting price to take these highs. This is what we're looking for. Okay, and then on the 15 minutes, we already marked out everything. Did we mark our volume HVC? So what's our HVC on this swing? HVC on this swing is our highest bullish candle here. So we might expect price to come to this level here. Okay, this is our HVC H1. HVC bullish. Okay, on H1. We might expect price to come down here. All right. Okay. But we don't want to see price close, bullish body close below this low. Okay. But now we're expecting how will this 1 hour candle will close. Okay. But we highly likely would love to see it close like a nice bullish body close to confirm the continuation. Or if not, price might come all the way down here at 9 a.m. at 9:30 and push up. Okay. Okay, once I finish the analysis, I'll check the news. Anyone can anyone check the news? Okay, to see what's going on. All right, and then this is our HVC bullish. What's our HVC bearish? Our HVC bearish is this candle here. This is our HVC bearish. Okay, this is our HVC bearish. So since this took the high of the HVC, this become our HVC bearish. So we have this at the HVC bearish now. Okay. If price close bullish body close in on top of here, so we expect price to do what? To keep pushing up. Okay, anyone can anyone check the news? Oh, at 10 a.m. Jobs and consumer confidence at 10 a.m. Thank you. Thank you very much, TK. 10 a.m. Thank you, rhythmic sound. Okay, this is our HVC. This is our HVC. Wasn't it HVC bearish, right? This was HVC bearish. Our price cannot close. HVC. HVC bearish. HVC bearish. Okay. H1. Okay, good. So we have all our HVC mark here. This is our HVC bearish here. Oh, this is our HVC bearish. Bullish, bearish. This is our HVC bearish. This is our HVC bearish. This is our HVC bullish. This one, okay. This is our HVC bullish, okay. And this is our HVC bearish on top of here. So we don't want price to close body close below this HVC bullish. We don't want price to see price close bullish body close above this HVC bearish, okay. So we have our HVC. So now let's check. Now we're going to check 15 minutes. What's the 15 minutes is telling us? And then see, we have a lot of confidence that price highly likely come and take this high here. All right. And then what's next? Let's just fix this very nicely so we can this is very nice. It's perfect. It is our equal highs. Okay, let's make it like dotted line. So we're expecting price to come to do what? Take this high. This is our goal. This is what we're looking for. Okay, take this high, maybe come all the way up here. And then on the 15 minutes, see yesterday. Okay, see yesterday, the beauty of the MMM. This is the beauty of the MMM. I'm telling you, if you wait for price will give you the entry. Okay, if you wait, price will give you a very, very, very nice entry. Okay, very, very nice. Okay, so price that let's check price here. Okay, we're going to check it within a couple of minutes, guys. The entry, the yesterday trade entry. Okay. And this is the 15 minutes. So let's just analyze the 15 minutes and then we're going to check the price, the entry, yesterday entry. Okay, so what do we see on the 15 minutes? We see that price already delivered inside of this unfair pricing gap, which means price needs to push up now. Okay, and then we have a market structure change here. And is it not really? Okay, this is our market structure change here on the 15 minutes here. Is this our MMM external block on the 15 minutes? Okay, we can just copy this. Let's place it here from the last candle before the PO4 and to the swing low. Okay. So news is at 10 a.m. So this is M15. Okay, we have the CDL on M15. You see, it's layers inside of layers. Okay, layers inside. Remember yesterday I say there's a lot of buyers at this level, and then when price came back to this level, what do you see? Price created what? Price created a MMM block here, and yesterday came back again. It created another MMM block inside of it, same level, which means there's a lot of buyers still in this level. Okay, and then we have a lot of unfair pricing gap on the 15 minutes. Let's just mark them out. We just mark them once for all. Okay, we just mark them one for all. UPG 15 minute. Another UPG 15 minute. That's perfect. Another one here. And then another one here. And then another one here. from here to here. And then we have another UPG here. So see, price is leaving all these breadcrumbs behind, which means when price push down, it will take all of this. It will fill out all of this unfair pricing gap. And then see these little breadcrumbs on the 15 minutes here. Very nice. I love it. So we have an unfair pricing gap on the 15 minutes. Right? Okay, unfair pricing gap on the 15 minutes. And then it didn't fully close, and then it leaves what? On fill and an unfilled portion on the 15 minutes as well, which is exactly inside of this unfair pricing gap on the 1 hour. Price is it's a marvel. It's a beauty, guys. It's a beauty. I love it. I love it. So if you understand how the market works, if you understand these kind of things, you'll see there's nothing more beautiful than the market. It's so beautiful. So this is a UPG unfilled portion on M15. Okay, exactly inside of the unfair pricing gap of H1, and then inside of this unfair pricing gap of M15, which means price highly likely come down here. So what do we have here? Here we have a lot of buyers at this level. Buyers here, buyers here. So which means liquidity. Buyers mean liquidity. Buyers. Okay. And we have buyers here as well. Okay, this on M1 and M15. Make it bigger. Okay. let's say 14. So M15. A nice couple of buyers here looking. So highly likely, if price were to come to this level at 9:30, so highly likely bounce from this level here. Okay, because we see that price is having difficulty to push up, or we don't know. It's either price push up, took this high, or price push down, come inside of this level here with a lot of confluence. If price were to really push up with strength, I would love to see price come down to this level here. I would love to see it. That price come down to this level here and push up. Okay, that will be the best case scenario. Okay, but see, price is in premium, guys. Price is in premium. If in premium here we see one of these candle were to close down here on premium, like below this pink area, you know that price highly likely wants to come back to discount and push up. If not, price need to come back inside of the trending area, which is between the extreme premium and discount, this white part here. So we would like to see if this is a retracement, we love to see that this candle doesn't close below the discount, below the discount. We just want it to reverse inside of this discount area, and inside of the premium area. So it is premium inside of the premium area, and push inside of the trending area and stay in between and push up. Okay, but if price were to close one candle outside of this pink area, so we are expecting price to highly likely push down to discount. All right. So far, there's nothing we can do than expecting to take a long. We expect price to do one, to retrace here. Okay. To retrace here, maybe so the best level we're expecting for price to react is here. Best level. Because price hasn't come back into discount here to give us an entry after this big movement up. See, move up, but while we expect price to come back to discount and then give us an opportunity to enter. But price hasn't moved back down. So we just need to wait. And then once price move into discount inside of the 15 minutes, maybe you can take a nice trade. But so far, we need to wait. And anything, okay, oh, the yesterday trade. So yesterday, and then see the 15-minute CDS, external block CDS here. So price didn't violate it. Price respected it. Price didn't come. So we were looking for trades. We couldn't take this trade because price was in discount. So, and then when price give us this MMM internal block, this would have been our MMM internal block here. And then we'll be marking it out. Okay? And wait for price internal block. And on M15, this will have been a nice trade yesterday. The trade of this M15 external block. This will have been the trade. And then so price give us a PO4 in what? In discount. In premium. Since we were looking for short. As I was saying yesterday, I was looking for short. Even when price was moving up, I'm saying I'm looking for short. And then let's measure the 50%. Since I don't really use the thing, let's just measure 15% of 50% of this candle. Okay. Okay, 50% of this candle will have been here. Your entry will have been here. Short. So you would have entered the short exactly when price came back here. And then your stop loss will have been here. Your stop loss will have been here, and then you target 1 to 2. 1 to 2, and done. You see? Price just, if you wait for all the confluence to be together, that price just tap, get you in and push down. If you do everything very, very well with the MMM, you'll never get into like drawdown. Whenever you enter a trade with the MMM, you see prices moving up, moving down. It's not the best trade to stay in. It's not the best trade to stay in because with the MMM, if your entry is perfect, you need to be in profit right away. See, price came exactly to the midline, okay, to the 50% of the PO4. See, with this candle, it just came inside of it. This candle, yeah, you will get tapped in with this candle. Yeah, yes, not really. But this candle is the most perfect one. Yeah, yeah, you get tapped in with this candle here, and then price just push down. And if you were to let it run until maybe you target this low, 1, 2, 3, and if you wait for the perfect trade, you'll find the perfect trade. But if you don't wait for the perfect trade, you'll just lose money. That's why the MMM is very perfect. It's just like very precise. It's very, very precise. If you lose a trade, which means like you did something wrong, and you need to look what you did wrong. If you're looking for trade in 1 minute, you need to find an external block in 1 minute. If you're looking for trade in 15 minutes, you need to find your MMM external block in 15 minutes. But remember, everything needs to fit the narrative of the higher time frame, of the 1 hour, the 4 hour, and the daily. For example, yesterday the narrative was short, right? And then I was like, I'm shorting because like from the higher time frame narrative was telling me I need to take a short, and then I was checking. So this is my external block, okay, on the 15 minutes, and then price respected it, and then this is the short here, 1 to 2, very nicely. Good. So see, price is reacting to this same level here. And then you see this level here, same level of yesterday. Price reacting to it. Price is having difficulty to cross it. But that doesn't mean I will be entering another short because I don't know what price wants to do today. Price is giving me the kind of vibe that she wants to keep moving up. Okay, so far so good. So we don't drop to the 1 minute unless we have a confirmation of price that price wants to keep moving forward. Like we have a clear entry in the 15 minutes. Do you have any questions, guys? Any questions so far? Need to wait for 20 seconds for you to hear what I say about if you have any questions. Any questions, guys? Any questions? So now with the 50th minute is in premium, which means we highly likely see at 9:30 that price move down here. Highly likely. This is what I will see. This is what I would love to see, a move down here to all this liquidity and push up. But if not, if price were to take this liquidity first, so we need to see that price keep pushing up. Okay. Okay. If price take this high first, price needs to keep pushing up. There's no coming back. But if price were to come down here first, it will be very nice to see that price just come and take all this liquidity here and push up with strength, which means if price come down here first, we highly likely and bounce, we highly likely see that price push all the way up here with strength, with power. But if price just cross here first, it needs to keep pushing up. Okay? Because 9:30 love liquidity. I don't trade at 9:30, to be honest. I don't like it because I feel like it's like the news. It's like news. It's like trading the news because price can do a lot of things at 9:30. Because at 9:30, when equity open, you'll have a lot of banks, a lot of institutions like fighting against each other, like throwing billions, dollars, millions inside of the market. You do not want to be when these big guys are trading. Do you want to be? No. For me, 9:30, if you're trading at 9:30, it's gambling. Basically, it's gambling for me because it's like 9:30 is like it's your daily news. You don't trade at 9:30. You know, if you respect yourself, you respect your account, you don't trade at 9:30. Just avoid 9:30 at all costs. Just wait for the candle to close, and then you chill. And you take your trade. You're done for the day. You know. Oh, what? Oh, that's mean UPG code. Okay, UPG is like unfair pricing guy. What I call it, the fact that I call it UPG because, like, for example, price consolidate 70%, 70 to 80% of the time, which means the market exists for one thing. The market exists to allow buyers and sellers to exchange assets, which means like it's a fair exchange, is to facilitate a fair exchange between buyers and sellers. This is the main objective of the market, to facilitate a fair exchange between buyers and sellers. All right. So which means price needs to consolidate. This is what price do all the time, consolidation. You see, price is facilitating exchange between buyers and sellers. See, buyers and sellers, buyers. There's no hole. There's no fair value gap, how you like to call it. Okay, since there's no fair value gap between them, okay, which means price is fair. Price distribution distribution is perfect. Okay, so whenever you have one side taking over the market, and then this is the moment you find this hole. So this hole, they are not supposed to be in the market because the market, they are not supposed to be all these hole. Okay, they are not supposed to be in the market. And then once you have them, so price needs so the market needs to facilitate fairness, or needs to allow fairness to take place. So the market needs to come back and give the chance to the sellers to enter the market as well. Okay, because this is unfair that one side is taking over. It is completely unfair that one side is taking over the market. So you need a fair exchange. Okay, since if this is fair price, whenever the market is pushing like that, this cannot be fair. This cannot be fair value. It's not a fair value. The fair value is this area here. So this will be your fair value price. From here to here, the consolidation is your fair value price. This is your fair value. Okay? Because this is where the market distribute or facilitate the exchange between buyers and sellers. Okay, so this cannot be fair value. It cannot be a fair value gap because this is unfair value. Since it's unfair value, which means the sellers didn't have any chance to liquidate their position. The buyers didn't give them any chance. So the market needs to create fairness. Okay, fairness. Everyone at the same level, same chance of participation. Okay, so the market will always try to come back to this level to fill these holes, to fill them, because they are unfair, to fill this gap, because these gap are unfair for who? For the sellers, because the sellers couldn't exchange their position, they couldn't exchange their money, or they couldn't exchange their asset. And then since price have two participants, buyers and sellers, and then so price needs to facilitate the sellers to come in, or facilitate them to liquidate their position. Okay, just imagine you get inside, just imagine you're shorting here. Okay, you're shorting here, and then the buyers took over, start taking over. You try to get in, they start taking over, so you don't have any chance to exchange your money. And most of us, why we lose, will be keep holding our position, because when we hold our position, we expect that price do what? To come back to this same level we entered, to this fair level here, because this is where we were exchanged with a fair price. Okay, this, you see the exchange with fair price here, down here, here. So since the sellers were taking over, exchanging, they didn't give a fair opportunity for the buyers. So now the market is giving the fair opportunity to the sellers to get in, to the buyers now to get in. Okay, at the same time, the buyers are getting in with aggressively, because they don't know what the sellers will be doing, so they need to liquidate the position. That's why they're getting in with strength, with power. Okay, because they don't want to get caught again, so they need to do it fast, so they don't get caught on the sellers market. So this is the way price work. Okay, so everywhere you see all market, market is distributing here, because sellers and buyers, they're kind of finding an agreement between them here. Now, okay, this is a nice level, this is a fair value, this is a value that we all agree to exchange price. So they all agree to exchange price at this level. So this is what we call consolidation, or exchange, or ranging. It's just buyers and sellers found this level very important for them to distribute price, to make the exchange between them. Okay, it's not this, is this, that's fair value gap. The fair value gap, I don't like the approach, because it's not fair value gap. I don't call it fair value. If you want, you can call it fair value gap, but for me, it cannot be fair value gap based on the explanation I gave Rosna. You know, it's a gap, but I don't like, because it's not fair. It's not a fair value. It's not a gap with fair value in it. It's an unfair value gap, because this unfair value, this gap, they cannot be fair, because there's an unfair exchange. It's the market main philosophy to facilitate exchange between buyers and sellers. If the buyers are taking over, this cannot be fair. This is not a fair value, because if it's a fair value, why the sellers are not getting any chance to get in? If it's a fair value, why whenever price come back to this level here, you're expecting price to move up? Which means because there's a lot of buyers inside. It's not fair value. So fair value is here. 1, 2, there's no exchange between, there's no gap. Fair value is here. 1, 2, 3, 4, 5, because there's no gap. You know what I mean? This is fair value. So this is the way I see it. Okay, this is the way I see it. So I hope this explain what I mean. Who's now? Because this cannot be fair, because the market exists to facilitate exchange between buyers and sellers. If there's a gap, this gap, if there's a bullish gap, it cannot be a fair value gap. It's an unfair value gap, unfair pricing gap. Okay, because the pricing is unfair, because the market it's for both people. Yeah, that's why I call them unfair pricing gap, because everything need to make sense. This my entire system is my system is based to make price easy to understand, to make price in a certain way, like very simple approach based on the market, how the whole market work. You know what I mean? If you go to a supermarket, you're buying something, you're exchanging price. You're exchanging price. Okay, let's go. Let's take an example. Let's let's say you're going to the supermarket, right? And then you're going to buy let's say bread, a loaf of bread. The loaf of bread cost is $50. And let's say $5. The bread costs $5. This is a fair, this is a fair price. Okay, $5 is fair price. Everyone is buying, okay, you are selling, there's no problem. Buyers and sellers, okay, you're making the bread, you're selling it, I'm buying it. You're selling, I'm buying, you're selling, I'm buying. The supermarket is selling, I'm buying. The supermarket is selling, I'm buying. Right? So at some point, the supermarket decide to raise price. When to raise price, let's say $10. So there's a gap between $5 and $10. So is this gap fair? The gap between $5 and $10. Anyone? Is the gap fair? The gap between the price you used to buy the bread, $5. We had a lot of exchange for, let's say, 1 year exchange between $5, and then suddenly you raise price $10. So between 10 and 5, there's a gap. Will you buy the bread? Yes or no? Will you buy the bread, guys? Okay, you need 20 seconds to respond. I need to wait. Will you buy the bread? Yeah, you need around 20 seconds to really see what I'm saying. See, you'll bake your own bread because because the value is not fair. So you make your own bread now because it's not fair, right? So if between 5 and 10, it's an unfair pricing. So we can say it's an unfair pricing, right? Yes or no? Since since it is an unfair pricing, no one will buy. That's why you see no sellers getting in. Only the buyers keep buying and buying and buying and buying and buying. They're raising the price. Okay, they keep raising the price. You'll never buy. So you're waiting for what? For price to come back where? To the fair value it was, to the $5, and even push down. This is the moment. You see, that's why like when you have an unfair pricing gap and it cross the midline, which means the buyers are not that strong, and it close body close, bearish body close, bullish body close below the midline, okay, or down, which means like this is a sign that the buyers are not in anymore. Okay, you're very happy to start buying again or to start selling again. It's the same philosophy, the same thing we see on a daily basis. But the fact is, like the trading industry, what they do, they complicate things. They make them so complicated, so difficult for you to understand. Okay? So difficult for you to understand. And then you keep losing money over and over again. You're losing money because trading is, if you really take your time to understand how market work, trading is quite easy to understand. That's why I developed my entire system around this kind of logic, like a kind of a logical approach to trading without complicated words, without complicated name and stuff. I just, if the market, if the candlestick is doing that, which means this is the way the buyers are thinking. If the candlestick is bullish body close, you think the buyer, this is the way the market participants are thinking. That's why you see everything is so precise, because I spent time and time and time and time developing it. Okay, so trading, if you understand what I teach, if you understand the MMM, the market is why it will be quite easy for you to understand, but it takes time. Okay, it takes time, so we need to give time to the time, and over understanding it, like see it as a very simple approach. Chill out, master the chill out, and study, practice, practice, trying to see it as very as in a logical flow. Okay, you see everything I teach, all this concept I came up with. It's not something you've seen around all over the place. It's something that I spent years, okay, studying, understanding and mastering it. Why price is doing that? The whys. There's everything I do. There's a why behind. There's a logical flow behind. Okay, and I'm okay. You can ask me any single questions you want. I'll be responding. I will be more than happy to do it, because I really love trading, and since I love it, and then I want to know exactly how it works. But if you go there and then you're watching 1,000 videos on YouTube, guys, you see the way I approach trading with my strategy. Even if you just follow it, like all the rules, you don't even need to worry about psychology. Okay, so I'll check on Whoop. I will check on Whoop. I don't know what is happening. I need to talk with Whoop. I don't know. So, and I will update the Max Maserati model very soon, so you can have access to it. We add a lot of new things on it, a lot of new stuff, and I think it would be amazing. Um, the new updates will be amazing. I'm just testing them. That's why I haven't released it. Oh, you get the UPG now. Oh, that's great. That's great. That's great. Yeah, you just need to reclaim it, and then so people who have problem on seeing the UPG, you just need to go back to raw, and then reclaim the indicators, and you just appear in your. It will just appear in your what is called. It will just appear in your chart. Yeah, good. If do you have any questions, guy? I'll be more than happy to respond to your questions. If you have any questions, I'll be very happy to respond to them. Any question, guys? I had trouble. Okay, yeah, I had trouble with daily buys yesterday after the 6 a.m. candle was a seek and destroy. Anyway, to get some clarity on what I was missing daily yesterday, seek and destroy yesterday. Oh, seek and destroy yesterday. Seek and destroy yesterday. We didn't have seek and yesterday. We didn't have any seek and destroy. This is the daily candle of yesterday. This one, it wasn't seek and destroy. It was a closing thought. This is yesterday. No, this is yesterday. Yesterday, Monday. Yesterday, 6 a.m., 4 hour. Oh, 4 hour candle. 4 hour candle of yesterday, 6 a.m. Friday, Monday, 6 a.m. It was a seek and destroy, yeah. Oh, okay. It was a seek and destroy. Yeah, because yes, it was a seek and it was a seek and destroy yesterday. What was your problem? Can you give me more? I think I explained about it yesterday as well. I explained about this candle yesterday. Can you okay? You can just go and watch the live I made yesterday. I think I explained everything about this candle here. Yeah. Yeah. Wasn't in the live yesterday. Oh yeah, yeah. So yesterday, watch the live yesterday live. I explained everything from A to Z about the exact question you asked. I explained about it. I explained why you should be bearish. Even this candle was a close inside with bullish affinity. Well, I explained the reason why you should be looking for short. Okay, so now, I should leave now because I need to leave at 9:15. But let's just wait until 9:30 to see what price will be doing. So we have a market switch change here on the 1 minute. Let's see. 1 minute. The price then come back to the scalp. So what price will do? What 9:30 will do? Anyone guess which one of these case scenario will be? Will price take this high first and then keep pushing up, or will price take the high and push down here? Okay, but I would love to see price come down here. I'll be so happy. This will consolidate me going long with more I would say more confidence, because I would love to see that price take all this liquidity at 9:30, that price come all the way down here. I'd love to see that. I'd love to see it. The price come and take entire liquidity. Yeah. Oh, this is closing bullish body close. Interesting. Bullish body close. Which means price highly likely take high first. Yeah. Highly likely take the high first. Interesting. Very interesting. Bullish body close on 15 minutes. 1 hour. Nothing yet. Yeah. Highly likely take the high. Oh, let's see. Let's see. But I love to see price come down here. I love to see that. Our price come down here, fill out this unfair pricing gap. We have 15 minutes. 15 minutes. Ha ha ha. And then 930 doesn't play around, guys. When 930 come in, it's and we are in premium. We are in premium. Price is so cool. Oh, guys, so far, what do you think about the MMM? Okay, what do you think about the MMM? Do you like it? What do you like about it? And do you feel you're understanding price much better? What's your take on the MMM? What do you like? What you don't like? How do you feel yourself like reading the market now? Is it much better? Do you feel more confident? Yeah, it will. Yeah, I think it will break it at some point. I think 930 will push up, highly likely. Or maybe price will just go up now, and then at 930, just price might come and take the high, yeah, and then at 930 push down. Yeah, but let's see. Yeah, here we go. Here we go. So now price needs to keep pushing up. Now price needs to keep pushing up. If price reverse, which means like we are tight. If price reverse to this level here, which means that our target, 930 target, will be down here, and then price highly likely push up again. Or we don't know. So these candle need to keep pushing up. When I started trading, I would sit there and wait for 930 and try to go long or short right at the bell. You know, at 930, this is where like the big institution, companies, this is where they will try to exchange the shares, the money, a lot of billions of $billions. You don't want to be in the market when these big boys are trading. You just let them tell you where to go. Just let them calm down. That's why you see at night the market go up, it went down, up and down. Basically, it doesn't really respect any confluence. 930 doesn't respect any confluence, to be honest. So you just let it pass and then wait for the market to calm down. And then you trade because you're just a small fish. I was trading NQ, looking for momentum. NQ will eat you alive. Others that wait for you at 930. Really enjoy the MMM. These live sessions are helping me understand price action much better. I am working on confidence, but my patience has improved incredibly. I'm so happy that your patience has increased because with the MMM, you will need to be patient. It will teach you to be patient. A lot of blown accounts and a few big things. Yeah, this is 930. This is what 930 will teach you. But in adrenaline rush, Brad. Yeah, man. 930 will eat you alive. Alive. Yeah, for me, like if I see a trader trading at 930 getting in, I'm like, oh my gosh. Oh my god! I mean, if you want, if you're good at making like at guessing, Ruben, if you're good at guessing, yeah, you can use it without any indicator. It's up to you. But you'll miss out on a lot of little things because your brain cannot compute where you'll have this high, it will this high. For example, like not all swing high are MMM. PO4. For example, here you might expect a PO4. Where will I say? Sometimes you might expect a PO4, but you don't have a PO4. Okay. For example, here. No, this is not a swing. There's a lot of swings that they are not PO4. You wouldn't know where you would have PO4. That's why you need the indicator. Only when you wins. Only only when you win, all the bad days get pretty low. Yeah, but the fact is, like, the trading is not about you winning few trades. Trading is about to find a consistency. It's about to find something that can give you, like, let's say example, £1, $1 every day, $1 every day. You know, $1 every day and every day and every day and every day. This is what you're looking for. This is what trading about. You're looking for you're looking for the market to give you something on a daily basis, like $1, $1, $1, $1 every day, $1, $1 every day, 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 rather than giving you like $10 in one day, and then for one day you have $10, and then the 19 days left, you lose and lose. It doesn't make sense. You know what I mean? So trading, for you to make a living, I'm not saying like to make a living outside of trading, to live outside of trading, you need to find consistency. You need to be consistent. You need to find that one trades every day that can give you, like, you can get this a winning, you know, even if it's $1, $2, but over time, a small aggregation of marginal gains will add up over a long period of time, and then you see that you're progressing very far away. But it's not like you're going, oh, I make $10,000 today, I make 5,000 today, I make 3,000 today, oh, I make 10. No, this is your ego talking. But if you want to make a living, these are our goals, you need to forget about all prop firms telling, oh, this guy make 10,000 or this guy makes 60,000. Forget about these guys. They don't want you to live outside of trading, because if you're consistently profitable on trading, this prop firm, they cannot make money. So they want you to lose. Actually, they want you to have a good. It's like, you see, it's like it's this game is well designed. It's like you go into the casino, or you go into the you know, like this machine, you put some coins inside, and then the roulette, I don't know what they call them, the coin machines. And you put some coins inside and you lose. But when you win, you have so much joy. You don't even think about the days you were losing. And then you keep going, because you want this adrenaline. You want this adrenaline to feel good about yourself. You want this adrenaline to feel like, oh, I'm so good. Oh, I made 10,000 today. But where is it? Where is it? Where's the 10,000 you made? Where is it? Ask yourself, where is it? Where's the, today I made 5,000. And where is the 5,000? Where is it? Do you have it here? No, you don't. So it doesn't matter. It's better you go slowly, build up your account. Don't forget about every single prop firm that's telling you can make a payout every day, or you can make a payout in 10 days, you can make a payout in 15 days, you can make a payout in 5 days, in 2 days. Forget about that. Focus on yourself. Focus on, like, okay, this is I want to live. First, this is the first thing you write on the board. I want to live. I want to make my life. I want to live on trading. Okay, this is what I want to do. I want to live on trading. Trading. Okay, if you want to live on trading, you need to be consistently profitable. To be consistently profitable on trading, what do you need to do? You need to go slowly. You need to go slowly. Okay, no worry. Go slowly. make your little money here, little money there, little money here, little money there. Okay. And then at the end of the day, you see, okay, you will reach consistency. Okay, you forget about getting paid, even in 1 month. Give yourself 1 month. Okay, for example, FTT. I think FTT is a very fair because they give you a funded account. And then, for example, you have a 300K account with 15,000 drawdown. 15,000 drawdown, guys. I never seen that. 15,000. So if you have 15,000 in drawdown, and then give yourself 1 month. Every day you trade one lot every day, one trade. You wait for the best trade. One trade, one lot. One trade, one lot. Every day, one trade, one lot. One trade, one lot. And at the end of the day, what do you think will happen? You will be profitable, guys. You will be profitable. But if you don't do it, if you don't do it like that, what do you think will happen to you? You will just throw money to you just throw money away. You'll be throwing money away anyway. You just give people money. And then you to keep that feeling alive, that feeling where you feel like satisfied, you feel good about yourself. You find yourself buying accounts again and again and again and again and again. You never stop buying account, buying account, buying account again and again and again. You never stop. Because why? Because you're not thinking about like making a living outside. You're not thinking about to make a living outside of trading. You just want to satisfy your ego. You just want to trade just to feel good about yourself and hoping maybe one day I might make a payout, and this payout might never come. Never ever come. Okay? Never ever come. And then you get trapped on buying accounts. Trapped buying accounts over and over again, over and over again, over and over and over and over and over again. And then you never get outside of the rat race. And then you spend all your money in buying account, and then just to feel good about yourself. So, but if you take a very slow approach, okay, you say, I'm going to pass this account within 1 month. I've tried it all, guys. I've tried it all. I have my spreadsheet, compounding spreadsheet. I've tried it all. I've tried almost every single prop firm out there. I think they use psychologists to see how traders think, and then based on how traders think, and then they make the rules. They make all the rules, and then based on these rules, and then you feel like you're progressing, but instead you're just giving money to them. But like our main goal is to make a living outside of trading. But if the rules are not fair, we cannot make a living out of trading. If the rules doesn't give us a kind of I stopped trading Apex. I have my PA account. I just deactivate all of them. I get the payout and close all of them. I don't want to do anything with Apex anymore. I mean, Apex gave me the opportunity to have 20 accounts, which was very nice. But I don't like Apex give me a lot of stress as well, because they have so many rules. You don't know if you're getting paid. You don't know how. You don't know what you'll do wrong. And you know what I mean? And I don't like this. Okay, I don't like it. And then so I'm like, okay, I just get my payout and then just deactivate all of them. All of them. Okay, so I decided to not trade with Apex. As long as FTT is alive, I just focus on trading with FTT. You know what I mean? And yeah. So this is my main goal now. Focus on FTT. You know what I mean? Trade with FTT. That's all. I don't want to do anything else. Okay? Yeah, this is the way I think now, guys. So yeah. And yeah, I mean, Apex give you the opportunity to have 20 accounts, but the unrealized drawdown, guys, it's crazy. I mean, even I pass it. I pass the account, but still, it's just a pain. Just a pain, you know. Do you see, guys? Do you see 930? Do you see 930? See, went up, down, and up, down. Do you want to be trading at this time? You don't know where the market is going, do you? You don't want to be. Up, down, up, down. Oh, it's by the grace of God, I never smashed my computer. The strategy is incredible, but you have to be patient. Yes, definitely. Good job, Dr. Max. Thank you. That's me. I have not been profitable. I lose more than I make. The realization that trying to make the quick money on fast scalps is what makes you lose. Just being patient and waiting for one trade is the way. Yeah, it's the way to go. Be patient. One trade, you're good to go. Max, are you still trading with Apex? Oh, no, I just responded to this question. I never did it. He's like, yeah, yeah. FTD for me is the best. I mean, they are very fair in terms like, for example, if you're looking for long term, if you want to live long term out of trading, I think they might give you this opportunity, like to live outside of trading with the 20. They give you an opportunity to have 40 account. Just imagine, guys, like a 40 account, 40 accounts, 40, 300K account with 15,000 in drawdowns, 40. What else do you need? What else do you need? You know what I mean? It's 40 account. It's like 40 account, 40 400 account is 12 million. And I think now I requested a payout with FTT. So I'll probably get paid between today and tomorrow. Okay. So yeah, in 10 days, within 10 days, I make 8K with them. So what I'm going to do, I'm going to buy 6 or 5 accounts once I get the 8,000, and then keep on making payout here on buy until I reach 40 accounts. Yeah, and just one trade per day. Every single trade should be based on the MMM. Yeah, that's all. Just imagine now you get inside of this trade here on the at 9, for example, at 9 a.m. You see price pushing down here. Okay, just imagine you get exactly at 9:30. What do you see? Price push down, price push up. You see here? So you basically don't know. You just wait. You just chill, relax. Wait at least 15 minutes to close. Okay. The market gives you a nice insight. You see, price is pushing up here. You might just push down, all the way down again, because you don't know. Around 9:30, the 15 minutes, 9:30, the 15 minutes at 9:30 to 9:45, guys. You just chill and wait. Just chill and wait. Or even you wait for the 1 hour to close or the 4 hour to close to have an idea of what price wants to do. So, for example, as I said, like price close, bullish body close on top of the 15 minutes here, which means price needs to push up. Yeah, if I wanted, I could have taken a trade because I already read the market, but I will never do that. You know why I will never do that? Because there's too many liquidity down here. Even price come all the way up here. We have MMM external block here. We have an internal block here. It might just bump here again and then push down. And then we are in premium, okay? Unless price comes out of price start trending, okay? But still, I wouldn't enter because the MMM system told me do not enter this market. And if I were to enter, I would be entirely short. But now, when like I think the market will come all the way down here, highly likely. That's why you don't enter at 9:30. Yeah, you can copy. Yeah, you have. Yeah, I mean, like it's okay. You take 2 trades in 2 different accounts every day. You have your LLC. You take 1 trade on it. You have, and then you have your personal account. You take 10 trade or 1 trade on it every day. 2 different trades with 20 accounts. 2 trades, 1 trade on each one per day. What else do you need? You just go slowly. One ES because it's a funded account. There's no rush. You put yourself, okay, I'm going to you see this is my job. I'm going to get paid every month. So you just trade lightly nicely. Don't focus on, because they say 5 days. If you focus on the 5 days to get paid on 5 days, you will blow this account. You will lose the account. You need to focus instead on getting paid every month. This is the way to go. You know what I mean? This is the best way to. This is the best way to go with FTT. Focus on getting paid every month. Here we go. No, just focus on 1 month. It's guys, first. What do? You go slowly, you build your equity, you build your buffer. There's no rushing. There's no rushing. You just chill out to get paid. That's the only thing you need. You wait for 20 days or 1 month. Oh, just focus on 20 accounts then. Yeah, just focus on 20. Just focus on 20, and then you just buy one. You buy one or you buy two. But I will really advise, like, it's like, for me, like, I prefer the 300K. Okay, because there's 15,000 in your down. You'll be like, if you blew up this account, it would be insane with 1 trade per day. And you just focus on trading well every day. You focus on trading well. 1 trade per day, done. 1 trade per day, done. And then after the first month, you don't take any payout. And then the second month, and then you try to get payout every 10 days. Me, I will buy all these 40 accounts. With 40 accounts, if we buy just trading FTT, get payout, buy new account. Payout, new account. No, I'm not. There's no, for me, I'm not rushing. No rush. No rush. Chill. Very chill. Get paid, done. Get paid, done. No rush. Yeah. Yeah, 40 account, 40 account. 40 account, 15K Jordan, 32K Jordan. Yeah, 40 account, man. It's a lot. 40 account with 15K, 15K in Jordan. It's good. It's good. Even you take 1 trade per day, it's good. It would be insane for you to lose this account with one ES per day, or one MES or one ES. It's a funded account. There's no rush. You don't need to pass challenge. Most of us fail. You know why? Because we focus because the challenge account, like, we just push on them, push to get to pass them, and we just trade or whatsoever. It's just a challenge. It's just a challenge. You just buy another one. Well, buying this another one will just create bad habit, bad habit, bad habit. Once you finally pass the challenge to get funded, you'll be trading the funded account exactly the same way as you traded the challenge, because the bad habit, you already invited the bad habit, and they are not going anywhere anytime soon, because they're already here. You see, this is what I say earlier, guys. I was saying that The 15 minutes, I don't want to see price close below this, below the premium, the pink, this pink line on the premium. So if price were to go higher, it needs to move up here inside of the extreme premium and the premium area. And then if price wants to keep going up, it needs to go with strength, with power, strength and power, no reservation, like strength and power, and push up, 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 up. You know what I mean? Exactly, this is exactly what is happening. So let's see how these 15 minutes will close. Only 3 minutes to close. Will it respect this MMM internal block, or will it close on above it? We don't know. So we just let price do what price needs to do. There's no worry. There's no rush. You don't need to do anything. You just need to chill and watch. And when the time is good, you just take your trade. Okay. MMM internal block violated. You completely fill out this unfair pricing gap here. 3 minutes left. Market is very strong. Almost there's no buyers in. Touching the CDS external again. Will this market close bullish body close, or will this market push down? It's 9:30. We just bump into the MM external block again. Let's see what this market will do. Are we pushing down? Are we closing? But I would love to see this market push down, guys. My best guess, I would love to see this push down here. Well, let's see. Because we just came back into this HVC bearish here. So which means like we're having a nice reaction from it. Will price push it close above? But you need to. I wanted to go long at 8:30 roughly. Can you give me some reason to feel good about not entering? For sure, at 8:30. Why will you go long at 8:30? Let me see. 8:30. 8:30 was here. Yeah, 8:30 looks nice. Let's see. 8:30. Yeah, you have a market switch change at 8:30. Yeah, but you couldn't, because first you wouldn't go long at 8:30 because of that. You see, price came down here, but price violated what? Price violated the low of the MMM external block here. So you wouldn't have anything to go long here because price violated the MMM external block. See, price violated this MMM external block. Even price gave you this internal block, but it violated this low, which means this external block is no longer valid. Okay, and then price keep pushing. Oh, it give you another MMM internal block here, and then let's see even though like you wouldn't go long because price wasn't completely in discount. It was in between premium and discount. See, there's no way to go long here at all. The only place to go long was if you were taking the trade based on this MMM external block here, and price came here, price came here. The only way to go long would have been around. Oh yeah, it's a nice long here at this candle. based on this MMXNL block. This is the long here. If it based on this MMXNL block, we will have gone long here, here, exactly here. Exactly here when price come back at the 50%. Yeah, exactly at 8, was it at 8:30? Yeah, it was like 8:49, I would say. Like 50% of this candle. 50%. Oh, you wouldn't go long because it didn't retrace back inside of 50% of this candle. But the trade will have been around here. Or it didn't retrace inside of 50% of the candle. So you wouldn't go long. I mean, I like everything to be perfect, but I don't think going long here will have been it wasn't favorable to go long. Oops. Yeah, you just wait for the best trade, and the best trade will always come. Always come. You'll always find the best trade, but just need to be patient. You see, here, price gave you a bullish body close, yes, but price couldn't really close on top of these highs, you know. But now, market might come back here, but I don't really expect it. I expect this market to push down. Highly likely. I expect this market to push down. Let me check the 1 minute. Yeah, we have a nice market structure change here. Yeah. Yeah. This market highly likely push down. Highly likely. Highly likely. Check the 15 segment. And then it's going to be close. Yeah. Mm. Yeah. Highly likely push down. But let's see. We don't know yet. So let's see if the price will retrace into discount. Into premium, I mean, retrace into premium and see. I don't know. Let's see the 1 hour, or those look like 10 minutes to close. Let's see. Or the 1 hour we close. Yeah. I don't think this market will push up. It's really looking to go down. These last 9 minutes will be like fire, which means this market highly likely come to take this liquidity down here. Isn't it beautiful, guys? Isn't it beautiful? So the best things to see now that price violate this low. This is our HVC. This is our bullish HVC. We want to see that price close below it. This will confirm that price will push down. I mean, yeah, this candle here. I want to see it close below it. I want to see it close below it. Bullish, bearish body close, and then boom. The price is so beautiful. If you know how, yeah, yeah, and this later, for this is the downside. Yeah, yeah, bearish. Yeah, MS is the downside. It's bearish. MS is bearish. Yeah, I was looking at 55, 6, and when I went to count down minute, I saw it right. Just missed the trade. I made sense. These little bits are what stopped me from being profitable. Just waiting to be in premium and a 3 or 4 bearish, right? Yeah, just waiting. I mean, you let for price to tell you what to do, but you need to wait for price to tell you when to do it. Okay, let's see. You see, price is having difficulty here because we have a lot of buyers here. So here we have a lot of buyers, and it's at the same time, not only we have a lot of buyers, it's the HVC as well. Okay, it's a buyers bullish body close on the 1 minute, but at the same time we have buyers here, and then it's an HVC. It's the HVC bullish. HVC bullish. So we expect price to react from this level on M1. Okay. So we expect price to react to this level. See, price came 1, 2, 3. Okay, but I think next time price we just crush it. We'll just crush it. Let's see the 15 minutes. What's the 15 minutes telling us? So are we pushing higher now? The price is having difficulty to push down. So price price is reacting to the fair. Just price. See, I was saying this is the fair value here. This is the fair value. If the sellers want to take control, they need to push price down. If the buyers cannot push price from this touch here, cannot push price up, which means they are not strong enough. If the buyers were strong enough, they wouldn't let price come all the way down here back to fair value, like giving the sellers a chance to fight them. You know what I mean? They wouldn't price wouldn't come back here to give the sellers a chance to fight them. Okay? Which means the buyers are not that strong. So the sellers are like kind of like, I can fight with you. I'm strong enough to fight with you. You know what I mean? So let's see if this price will close bearish, bullish, bearish body close here. But I think it might. It'd be very nice to see a bearish body close here. Very, very nice. Very, very nice. We didn't have a bearish body close, but let's see. Now price will push down like crazy, guys. 5 minutes for the news. 5 minutes for the news. Here you go. So do you like this live analysis tape reading, guys? Do you like them? Love it. Yeah. Oh, thank you, Vlad. Thank you. Thank you. Thank you, Brad. Happy Lizzy. Thank you. TK. Thank you. Women sound. Love it. Thank you, guys. Don't forget to share, guys. Please share them. Share them on your social media so more people can understand how price the market really work. And then if you can share the lives, if you can share the YouTube, and then if you can like it, that will help a lot. So I can keep doing them. Okay, the news are coming in. See, yeah, I will try to do it consistently. I will try to do it. For example, what I'm planning to do, I'm planning to do the live for you guys on Monday and Thursday, Monday and Thursday in English, and Tuesday and Friday in Creole. And on Wednesday, I'll be doing a live session for the mentorship. So for Wednesday, for tomorrow, I'll be working with the mentorship. This will be like private, but Tuesday I'll have mentorship class plus trade and live explanation. But normally Monday and Thursday, I'll do Monday live. Monday and Thursday I'll do live, and then Monday and Thursday live in English, and then I like, for example, London session. I don't really trade the London session because I want to, because London session, I'll be like waking up in the morning here. I just want to chill, you know what I mean? I don't want like trading because like I just take me like to take one trades for me, it's just within seconds. I take one trade and done. But like for example, in the morning, I need to. I mean, I could do it during these days, but I prefer in the morning. I just wake up whenever I want to. I don't want to wake up in the morning at 8 a.m. London time or 7 a.m. You know, I just want to chill in the bed, sleep, and wake up and sleep again. And then at 1 a.m., 1 p.m. here, just come and do the live, chill, relax, you know, go to the gym, enjoy my free time. You know what I mean? Because like for I trade just to have freedom, you know. But if I trade to have freedom, but if I do like the London session, I will take the freedom away from myself, and I don't really like to trade London. Yeah, so yeah, market is looking very nice. So, lol, I'm all in front of the screen. No, no, don't do that, bro. Just come, just find a good 1 hour to trade. Don't be in front of the screen all the time. Just do your analysis. Like, just take this stress away from yourself. Say, okay, I'm going to trade every day at this time. You know what I mean? It will take the stress away. I used to trade London back in the time, but I realized this is not the best thing to do. Like trading London, it just like it will give you a lot of stress. You know what I mean? It gives you a lot of stress because it's not the best thing to do. It gives you a lot of stress. Yeah. So that's why I don't trade London. See, this is what I was saying, guys. What do we see? What do we see? That price came exactly to this level. Exactly to this level. The exact level. Because like I'm like, price will not leave this liquidity behind. No way it happened. Now we can go higher. Now if price want to go higher, yes, we can go higher from here. You know, because price will not leave this liquidity behind. No way. No way. Now we can have a nice bump from this what is called this settlement line. Like price push down here, settlement line, and give it a nice bullish body close. You know what I mean? But price? No way. You see, it is exactly what since we entered this life, if you know how to read price, price will tell you what price is going to do. He will tell you exactly what it's going to do. But you need to know how to read it. It's not random. Price is not random. What did we say? We say price will come and take the buyers and come here, fill out all of this. See, do you see how it fill it out to that thick, and push up. See, to that thick. Look at this. So precise, exact. See, very like very precise. The market is even you see it's like random, but it's precise. See, precise. So now, if price wants to go higher, this is where price should do it. For example, I might expect price to even come to this level here. Who like just touch this level, yeah, just touch this settlement line, and then give me a push up, you know. Yeah, this is a beauty, guys. This is a beauty. This is a beauty. It's a beauty. The breakout on the 15th for midnight. I don't even really know where's midnight. I don't really know where's London high, London low, Asia. I don't really trade them. I don't really care, to be honest. You know what I mean? Because I know what I need to know is how the candle is closing, how the candle is opening. This is my main focus. I want to know how the candle is closing, how the candle is opening. Okay. So now let's wait for the 1 minute to see if we can have a nice trade here. Mhm. Eh? Eh? Everything is perfect, exact. It's an exact science, guys. An exact science. It's not. There's no magic, guys. There's no magic, and I love it. Oh, I love it. There's no magic. You just need to know how to to read price. That's all you need to know. What a beauty! What a beauty! Oh, exactly. This is exactly what we did. This is exactly what we the entire analysis we did this morning. Exactly what we were expecting. Oh, gorgeous, gorgeous, brilliant. Mamma mia, mamma mia, mamma mia, mamma mia. What a beauty! What a beauty, guys. And you just need to master the system. And by the way, I'm launching a new class. I'm launching a new class, and it will be over 3 weekends. So if you want to learn more, if you want to know more, so it will be over on the next 3 weekends. And what I wanted to say, oh, what a beauty! I love this game. Love it. Love it. What a beauty. And then let's see. Are we pushing up? This is 15 seconds. 1 minute. This is our 1 minute. So since we have a market structure change here, we have a market structure change here. Okay, so we need to wait for price to do what? To retrace back. Okay, give us a nice PO4 here on this level here, and then see. We want to see a nice reaction from this level, and then we get a nice PO4 bullish, and then this is where we enter our trade. If we were to take a bullish trade, this is the moment we enter it. Unless price wants to do something else. Okay, this is the class I'm planning to do. It will be on August 3rd, 4th, 10th, 17th, and 18th over 3 weekends period. It will be from 1 p.m. to 3 p.m. All right. And then I'll be talking about the MMM integrated approach to trading psychology. MMM bias, it's like ultra efficient candlestick reading for all time frames. Most importantly, framing the institutional daily bias. HVC is the most influential volume candle, focusing as confluence or for continuation retracement of reversal. Buyers and sellers candles areas, top-down analysis with the Max Maserati model. A MMM profit compounding and efficient risk management journal to succeed with prop firm. MMM blocks, external and internal. UPG, okay, market liquidity points for profits taking and entries, Q&As. So this is exactly what I'll be talking on, and then I will give you 3 types of entries or to enter with the MMM. But sometimes I just teach the general public 1 entry, but I have 2 more other entries which they are this type of entries just enter without like even thinking of it. Yeah, they are the most precise entries. You just do all the analysis, and then like this type of candle, when you see them, just enter. It's just beauty. So yeah, and then yeah, so I'll be launching it on WAP. I'll be like sharing this soon with you guys. So still working on it, and yeah, let's go back to the chart. Oh my god, I shouldn't even be here with you guys. It's 3:12. I need to leave. I need to meet someone. No, my friends. I need to meet one of my friends out. I need to leave now. I need to get ready. I need to leave. But at least now you know, guys, what to expect for, because we have a market switch to change bearish here. Okay, we have a market switch to change bullish here. Okay, so we're just waiting like a nice PO4, like a nice PO4 bullish, and then you know the drill. You know the drill, guys. Yeah, and I think that's all for today. If basically in 2 minutes I need to leave, and thank you very much for watching the live. And then let's see, will price keep going down, or will price will give a PO4 here for the bearish? Will price keep going down, or will price push up? We don't know. So let's check. Yeah. Okay, anyway, thank you guys for watching, and then you know the drill, you know what to wait for, and then I hope you all the best. All right, cheers. Please take care. Bye-bye. And don't forget to share. Please share, please like. I only see 10 likes so far. Mine is 11 now. We have 23 people here. So yeah, so please like and share, and yeah. Yeah, okay, go for it, Brianna Clark. You'll learn a lot. You'll learn, yeah. If it's your first time here, you'll feel like, oh my gosh, I don't know what's going on. But it's if it's your second, you've been watching my videos and stuff. If you are in my Discord, by the way, there's all the links here to my work, to the classes, the free learning materials, to work, and to my Discord, and to my what is called my Twitter. I'm not a big guy on social media. I'm trying my best. Yeah. So thank you very much. So now, okay. So we see here, we completely did I stop this live? We completely fill out this unfair pricing gap in the 1 minute. So now we are waiting for a bullish body close. Okay, a PO4, nice PO4 bullish, and then we still into discount, and then done. Okay, guys, thank you very much. Cheers, and please take care. 15 minutes. I need to go.